Hey guys, hope you are all having a great day. GameStop and AMC were running really well today, bringing much needed respite and a sense of joy to all meme stock investors. We have been getting pounded for weeks on end, with green days being small enough in gains that the next red waves simply erase all progress made. But watching the stocks rise on the charts wasn't even the most bullish thing today. We have some really good news coming from AMC that will fundamentally help their bottom line for years to come. We also have some interesting developments to go over related to GameStop and their partnership with Immutable X. We have yet to hear about Looping's partnership, but I have no doubt that it's coming sooner or later. There have been some significant developments regarding the Fed, or at least, the overall perception of the private sector in anticipation to what the Fed is planning, and I want to talk about what is being said and the probable implications of it going forth into the year. We are loaded with content to discuss today, but before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Let's begin with the big news. AMC Theaters announced that they reached a lease agreement with URW to acquire and open two high-profile locations, which are both located in a major market. One is located in the San Diego market, and the other is located in Washington, D.C. It is important to highlight that AMC remains in active discussions with other property owners regarding additional closed locations. Adam Aron had a public statement to make, and I quote, "AMC continues to play offense and aggressively seek out opportunities to strengthen our company through strategic acquisitions. We look forward to bringing the AMC experience to even more guests in and around San Diego and Washington, D.C., at these previously high-traffic, well-known theaters." With this announcement, this brings the number up to 6 former ArcLight and Pacific theaters that are being added into the AMC orbit. Our most recent acquisitions of AMC The Grove 14 and AMC Americana at Brand 18 are already showing their success, as those locations routinely finish in the top 10 theaters in box office performance among more than 150 theaters in the LA market, and in the top 30 in the entire United States. For a company that is supposedly out of luck and tethering on the edge of failure, AMC sure seems to continue to expand and produce growth while expanding revenue. The amount of putrid hatred towards this company in GameStop by the corporate media is absurd, and they are now shifting strategies not to insult AMC and GME more, but to instead hyper-focus on insulting retail investors and calling for measures to bar them from being able to buy individual stocks. Yes, I kid you not when I tell you that Bloomberg allowed some low-tier journalists to produce perhaps the worst article one have read to date, and that is saying something. Alison Schrager titled her magnum opus, "Stock Picking Shouldn't Be Allowed for Everyone. Most people who own shares in individual companies don't really know what they are doing," asking if the government should set more guardrails to prevent people from the liberty to choose what to invest in. In the sad excuse of this opinion editorial, Schrager poses the argument that as volatility comes back, saying that the meme stock era is about to end, it's worth asking if investors should even be allowed to own individual stocks. She then owns herself by saying that part of what embodies American capitalism is being able to buy a piece of the business you admire or respect, but then undermines this sentiment by proposing that this liberty should be restricted. In her logic, or lack thereof, she says we have set up guard-railed and warnings when it comes to other aspects of our lives like data protection when buying mattresses, but that individuals taking more risks with investments is not restricted, and sometimes cheered on, and that needs to stop. The crux of her opinion lies on the interpretation that risk as a whole comes in two manners, idiosyncratic and systemic. Idiosyncratic risk is the risk that a stock will rise or fall, which is taken and accepted every time you buy a stock. Systematic is the risk that the whole market will rise or fall. There is not much that investors can do about system risk, unless you are Kenny or Nancy Pelosi, but according to Schrager, idiosyncratic risk is totally avoidable. Diversifying your portfolio properly will net you a higher return on investment on average, which is why index funds tend to outperform most companies. Following Schrager's logic, she then comes back to start hammering down culpability of market volatility on retail investors. She calls it surreal that Senator Elizabeth Warren argued small day traders weren't the problem during the meme stock rally, but rather that it was the behavior of big investors that needed to be reined. She then somehow ties this to bring home what she thinks should happen. Please buckle up and wear a helmet. What I'm about to go over might result in mental impairment, long-term traumatic brain injury, reduction in cognitive abilities, and undeniable autism. She proposes that retail investors should view stock picking as a hobby, and not investments, and that they should only be allowed to dedicate a small amount of shares to individual stocks. She says regulators should only allow accredited investors, defined by herself as people with a high net worth and hedge funds of all entities, to be allowed to buy into individual stocks. Price discovery is important, but Schrager wants to keep trading of individual stocks narrowed down to the big players. She says investors need to be warned and subjected to relentless disclosures of the potential that they could lose money when trading stocks, or in smoother words, she wants to scare retail investors away from stock ownership, at least from companies. Alison Schrager's reasoning in this is very questionable, and the timing and weird disposition of the narrative she produces has me scratching my head if this is how the corporate media is going to be driving the narrative down to the masses to scare off people away from investing in stocks completely. It is clear that corporate media, which is mostly owned by hedge funds and other scummy financial institutions, don't like retail participation in stocks, because when retailers come together, it forces the big institutions to do something that goes against their very nature, which is to be accountable for their actions. She makes valid points in that many investors don't do research or learn about investing prior to putting money in stocks, but I don't see her making an argument that casinos should be outlawed, or that buying anything that is not fundamental to the growth and needs of a person should be made impossible to get. This is a hit piece against the citizen, the taxpayer who labors day and night tirelessly to afford a chance to get rich by buying assets with the sweat of their brow. Schrager, please try to put yourself in others' shoes. Perhaps you will come to understand that not everyone is afforded a pristine career with everything handed out in silver platter, and that risk is the only way for some of us to escape poverty. A great middle point would be to entice the government to fund proper financial education so that people can learn how to make smarter choices with their finance, but of course you don't say that. Retail investors must be subjected to the belittlement and antics of desperate journalists bitter that they are becoming less relevant by the day. Miss me with your BS, Karen. GameStop recently announced their partnership with Immutable X, finally starting to slowly show the world the progress and direction that the company wants to take to become more profitable. Their new partnership was announced on February 3rd, and following the news, the Immutable X's native crypto rallied by 47% to a high of $4.13. Upon this rally, according to on-chain data, GameStop immediately sold 8 million IMX tokens worth $27.4 million from the $100 million grant it received from Immutable X after the partnership. Now we also know, through Blockchain Explorer Etherscan, that GameStop had sold close to 15 million tokens over the week in a series of 3 transactions, putting the total at $47 million in sell-offs. GameStop saw a jump and took action to take good profits on the investments, while still holding a ton of tokens for the future. Next up, we have Bank of America, which has switched opinions and is now predicting a stunning 11 rate hikes for this year and the next. The bank is assuring investors that everything will be fine and that they see stocks growing, but that they now expect 2 or 3 more rate hikes than the futures market does. The economy is simply missing the mark, not being able to reach the Fed's goals, and it's running past all the stop signs. Unemployment rates are falling steadily, but inflation is moving on non-stop, and even if supply chain problems were corrected, chances are that inflation will remain up. Though it will put a dent in economic growth, analysts say that the rate hikes won't be enough to bring it back to neutral levels, which would be where economic growth stops. My thoughts on this are, normal workers, which account for the vast majority of the American workforce, are going to be falling behind, which is what Tom Hoenig has been saying for years. Hoenig is an idol of mine, being forced out of the Fed for being the only person with integrity and common sense to tell them that quantitative easing is leading to the wealth gap and hurting Americans and the economy in the end. Everyone knows this, but it's an unwritten crime to address it, and a quick way to earn enemies if you try to fix it. Because the economy is going to be rocky, wage earners, a fancy way to describe middle and lower class, are going to have less pending power. Expect the wealth gap to increase, for the 1% to consolidate further growth and for the rest to suffer. It's a grim outlook, I know, but it's the reality of the situation and everyone knows it. Even the media is finding it impossible to avoid saying it. I'm just going to do my thing and cope by buying more meme stocks. Let's now talk about today. The Fed submitted over $1.674 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 56% of the total volume today, while dark pool trades for GameStop accounted for 54% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bullishly, gaining over 10% for the day. It began trading fairly weak during the pre-market, staying below the VWAP. Upon market opening, AMC dipped a bit and then ran past 15.20. After retracing back down to support around 14.70, AMC began moving up very aggressively for pretty much the majority of the day. It would eventually reach 16.82 before shorters began attacking it. It retraced back to support at 16 before bouncing up and closing at 16.43, above the VWAP. As for tomorrow, AMC will find support at 16, 15.50 and 15. Resistance will be met at 16.60, 16.80 and 17. AMC finally broke the resistance of the channel it was in. Now, it needs to consolidate and move upwards, testing higher than 16.60 so that it can easily jump above 17. It was a very green day for AMC, 10% is nothing to scoff at. Everyone who has been buying for the last couple days printed really nice today. GameStop traded bullishly, gaining over 12% for the day. It opened to a nice run above 105 before falling back down. It had entered into an ascending triangle, one which it would break resistance and end up running from 102 to 117.67 as the highest point today. It would begin retracing after this, finding support at 110. It bounced up, closing at 115.60, above the VWAP. As for tomorrow, GameStop will find support at 110.64, 102 and 94. Resistance will be met at 116, 119 and 124. GameStop's run was fantastic to see. I want this stock to stay and consolidate above 114 tomorrow, as it will give us a better chance to run to 221 by Friday. There wasn't a lot of support or consolidation happening in this run, so I think shorters are going to have an easier time taking it down, but I think it will find very good support around 116 if this happens. And that is all I have for you guys today. I released a ton of new cool content on my Discord, so come check it out. I promise you a really cool trading community of like-minded traders and investors, all talking about GameStop and AMC and the markets. Come join us once and for all. I will leave a link in a pinned comment below. Thank you all so much for watching my video. Let me know your thoughts below in the comments. Remember to check out this morning's video as well if you missed it, it's very important. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.